You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from don't forget the optionsinsider.com is the place to go to check out all this great content we have. Of course, this network available pretty much on every audio platform under the sun. If you want the mobile app, it's available for you there in all the different app stores as well. If you like what you hear, throw some stars wherever you get it, whatever platform it's available on. It does help new people continue to discover the world of vol and all the content on the network these days. And of course, if you want more content in your lives, and who doesn't these days, then head on over to theoptionsinsider.com/pro. That's the place to go to learn more about all of our pro offerings. You get, of course, options oddities coming up after this show today. So your week doesn't end with volatility views. And then, of course, you get the pro Q&As every week as well. You get, now if you go up there, 200 plus hours worth of content already available for you. The second you hit the button, it's pretty crazy. As well as, of course, a live access to this, everything else we do. And maybe coming up today, we'll see winner of the May Pro Trading Crate. Perhaps we will reveal that today here on the show as we reveal who's joining us on the show today. First, we go out to the Southern Volatility Mecca, known as Austin, soon to be the home of RMC 2023, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
All right, Mark, good to see you. I'm glad you're here. Glad we're all here. And quite the day here, quite the trading day. Looking forward to having you here in Austin. We're going to take you out for some barbecue. We're going to, go check out F1. We're going to have ourselves a good time when you come down. So just be ready there, Longo.
I am ready.
Maybe I'll make you buy the steak this time.
Ooh, fun. I'll buy the barbecue. It'll be good. I won't buy the F1. I heard those tickets are absurd.
No.
We'll put that one perhaps on the old SIBO, as we are joined also this week once again in our ever-evolving guest chair listeners. The battle for this guest chair is contentious, but once again, Mr. Rhodes has won the battle. Mr. Russell Rhodes, the author of numerous volatility tomes, also holding court over there at the KELLEY School of Business. So, corrupting minds for the future. Mr. Rhodes, welcome back to the show, to you as well.
You know what? What is it? 7 hours and 52 minutes. It's a countdown.
What are we counting down to?
Taylor Swift.
Oh.
She hits the stage at 8 o'clock tonight. I'm calling in from my car in the parking lot at Soldier Field. I will be rushing in to get to my seat.
You could tell you're the
excited.
father of 2 teenage daughters. Yes, that is.
I am the father of 2
epochal event here in the Chicagoland area. I saw the headlines, people lining up at 1 a.m. to buy merch. Yep. It just seems like insanity. But hey,
it is.
Good times nonetheless.
I'm getting both you and the other Mark Taylor Swift shirt.
I look forward to it. I'm sure they won't be that cheap, so it'll be quite the outlay for you. I
Nice.
appreciate the effort there. Speaking of outlays and just giving gifts, Mr. Rhodes, I am going to give you a gift, which you in turn are going to give to our pro members, because I just fired up the Wheel of Death, a.k.a. the prize wheel for who will win the May Pro Trading Crate. And Mr. Rhodes, since you're joining us today in the hot seat, you get pride of place. You get to pick. So the wheel is spinning right now. It's got all the member numbers in there for our pro members. When you tell me to stop, I will hit stop, and that will tell us who our member is. So,
I don't have to guess a number?
No, you don't have to guess a number. Maybe we could do it that way too, but I like just hitting stop. It's easier. Then everybody's in it.
Does somebody have member number 420?
I'll have to go look and see. I don't know all the numbers off the top of my head.
All right, I'm getting ready. I'm going to count down to stop. You ready?
All right.
3, 2, 1, stop.
All right. There we go. I was right exactly on the trigger finger, listener, so no one can accuse me of any bias whatsoever. All right, let's go. That is not member 420, but it is. Oh, wow. Alan, one of our OG members, Mr. Allen. I think you've won one before, but it's been a while. So there you go. Rounded out a second pro trading crate. My goodness, the luck, the fortune is upon you, sir. Wow. Congratulations to you. Hey, we love all of our longstanding folks who've been with us for a while. So we're happy to send out, maybe not happy, maybe happy is a strong word, because if you looked at shipping rates these days, these things are exorbitantly expensive to send out. I don't know what I was thinking when I created this pro trading crate, but you know what? It's fun. We got to get this stuff out of here to somebody. So glad it goes to you folks here. Alan, congratulations. You want to get your name entered into the hats for the drawing for the June Pro Trading Crate. Only one place to go. TheOptionsInsider.com/pro as we keep on going right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. And, you know, for the crate, Mr. Rhodes, we include educational content in there, usually educational tomes. We have a bunch of others to choose from. I don't think we have any Russell Rhodes books. I think those are all gone. We might have to restock on the Russell Rhodes. That. Yeah, we have to restock the Russell Rhodes tomes so we could send some of those out. I think the last one we have on hand is the Advisors and Institutions one, I believe.
Okay.
All the rest.
No, that's not a very good book. So, I admit that's not a very
says the author of it. So that's the last one standing. We'll have to restock the Russell Rhodes shelf. So future winners can take home some Russell Rhodes wisdom. Let's see what you're taking home out there in the market today, listeners. And, you know, it's one of those days, listeners. Apparently, we're back to the good news is good news paradigm again, because the market blowing through the jobs number this morning, just knocking the cover off the ball, which you would think in hindsight, given all of the efforts of the Fed over the past year to rein this market in, rein this economy in, rein inflation in, you'd think that might be more than a little concerning to people when we have, 339,000 jobs versus the 190,000 expected. That kind of shows you that everything the Fed has thrown at this issue has been for naught. We have done nothing, and yet the market just exploding with exuberance at this result, listeners, up nearly 1.5% in the S&P. So we're closing in on 4,300, the S&P. We were just a little bit shy of 4,100 just a few sessions ago. So we're rocking and rolling a couple of sessions out here for the S&P. So apparently good news is good news again, listeners. Put that in your docket, unless, of course, you want to maybe rein in inflation, in which case maybe not the best news. But hey, pay no attention to the man behind the curtain. Dow up nearly 2%. So Dow leading the pack today. We got a bit of an inversion day because the NASDAQ's being the laggard today, up a little over 1%. So a little bit of inversion of what we normally see out there. All this green on the screen means vol has gone to die, listeners. VIX cash 1480 when we kicked off the show. We were just talking about how crazy it was to have a 15 handle yesterday. We were at 1580 on the option block yesterday. Off another point from there. So they are just coming for vol. It's scary to say out loud, we are now not that far, listeners, from the insane 12-handle days of 2017. Of course, we got much lower in 2017. We got into single digits. No one wants a repeat of that, but we are now 2.8 handles away from This is terrifying, but that's the word we're in, listeners. Down 3 points from last Friday's show. VVIX also coming back down to earth, 85, down 12 points from where it was this time last week. VOLQ 17 3/4, down about 1.5 points. So a lot to unpack there. Speaking of unpacking, let's go to the Southern Volatility Mecca. Mr. Meatball, are you surprised that we're back in the good news is good news paradigm again? And are you also surprised that we're rocking a 14 handle out there today in VIX? And what else is catching your eye out there, sir?
No, I'm not surprised. I believe I've been calling for the VIX to go to maybe 12 or 13 for some time. And I think we're well on our way. Now, do I think that parts of the market are overbought? Yes, the NASDAQ 100 is way overbought. But that doesn't mean we're going to sell off, because I think what you're going to be looking at is some underperformance of the triple Q, underperformance of the mega caps, and you're going to start seeing some of those industrials. So the reason why good news is the industrials have been so hammered. We're so worried about recession that now, when we get this positive employment report, what do you see? You see the industrials, you see the materials, you see the financials all take off. Meanwhile, you get a little bit of underperformance out of all the hot AI names, your Apples, your Googles, all the mega caps that have really held up this market. So what's interesting is on the rally, for most of this rally, the S&P has been going up, but the market breadth has been awful. Today, it's the opposite of that, right? The mega caps aren't doing that much, but the market breadth is great. So we could see a scenario where we just kind of creep higher in the S&P for the next few days, and VIX just kind of dies and dies and dies and dies. We've seen a just dramatic drop in the VIX future. It's gotten absolutely smoked. The whole curve has steepened significantly, and we'll talk about that in a second. But no, this is kind of what I think the strength of this rally is a little surprising, but the fact that we're rallying, not a surprise. The fact that we're seeing the NASDAQ kind of be the laggard here a little bit, being lifted by kind of the bottom end of the NASDAQ. So for instance, this is something we haven't seen in a while. QQQE, that's the equal weighted triple Q, is actually outperforming the triple Q itself. RSP, the equal weighted S&P 500 index, outperforming the S&P. And what that shows us is that some of the less loved sectors are the ones leading us today, something that we had not seen in quite some time.
Mr. Meatball, you know what my first indicator, before I even fired up my vol screens for the second half of this week or anything along those lines, you know what my first indicator was that the vol worm was turning, sir? I fired up this account just to check some things that were in there. And I was like, what is this strange little burst of green here in this forgotten portion of this account? And I looked into it. Oh, yeah. Remember all those June 15 puts we bought 6 months ago on this show?
And we were like, these are only 7 cents.
They were 7 cents. And it was just a fun lark to do. It was like 6 months ago. It was so long. I've totally forgotten about them.
It was at least 2 months ago.
Oh, it was more than that.
And I bought some myself and sold half my position at 21 cents, up 200%.
Yeah, isn't that ridiculous? I happened to see those. I was like, wait a minute.
And I'm going to sit on more of them because, the VIX is 1480, continuing to drop. These things could be worth $1.
I had the exact same thought. What if these puts go out at $1? It's absolutely insane.
Folks, I think the lesson here is listen up when Mark and I are getting on a trade.
Yes. When we get giddy about nonsense, join us in the fun because you never know if 6 months later you too could have a surprise windfall in your back pocket. And
that should be our moniker. Yes. Volatility Views, where nonsense pays.
Yeah, there we go. I would listen to a show like that where nonsense pays. There certainly is an air of truth about that. Mr. RHOADS, sir, what nonsense, aside from Taylor Swift, what nonsense is catching your eye out there in the market today, sir?
Russell,
Your namesake index, sir?
Look at the Russell 2000 today. Are we looking at it?
It is popping.
See that 2.68%?
Dang.
Yeah. The Russell basically just a couple of weeks ago was down on the year while everything else was up. And we had the widest divergence in performance between the Russell to start a year and the S&P 500 really since 2000. And the Russell is going to play some catch up. I've been getting in shape so I can push all the Taylor Swift fans out of the way to get to the the merch and everything. So I'm in a better shape, and the Russell 2000's in better shape today as well.
Yeah, that was one of the more surprising dichotomies of the market. Just no one gave a crap about small caps at all. It was getting annihilated. Right, it was down for the year at one point, while everything else was just getting carried. Obviously, Russell lacks those 6 to 8 stocks we're always talking about that have carried the rest of the market on their back this year. So that's a big differentiating factor. But still, yes, this resurgence out there today. Small caps up almost 3%, listeners, 2.9%. So I've been joking on the option block for a while. Is this 1 million contracts a day sustainable in IWM? It didn't seem like that was the case, and I have been proven wrong, and I am happy to admit it because Russell putting up some numbers and doing so again today. Speaking of numbers, let's see what numbers we got in store for us out there on the VIX futures front, listeners. And coming into showtime, a spoiler alert, they're down. A whole curve obviously taking a nice shift down too, which will be nice if we see that chasm, that gulf continue to collapse between the cash and that June future. One of them has to go somewhere at some point. But right now, when we come in to start the showtime, it was still at about 2.1 points. We got a little more collapse on that. And then those June 15 puts will be going towards that mythical $1 level. I'm just going to work a $1 offer now, and we'll just see. I'm going to be that obstinate of a guy. If it gets to 90 odd cents, I'll be like, nope, $1. Not rich enough for my blood. But yes, coming into showtime, listeners, the whole curve down, the front portion, the June coming in, 2.5 points, hence those June 15 starting to look juicy. The July future down about 2.25 points. Looks like we top out at around a 23 now, and that's getting out into next year. That's getting out at around February in the curve, about its February 23.15 or so. So a 23 handle now is the upper bound, at least for this week out there on the futures, which is intriguing. Mr. Meatball, sir, anything catching your eye out there in the volatility futures this week?
Oh, yeah, for sure. I mean, the futures curve has just gotten smashed. I mean, absolutely smashed. And what's interesting is VVIX, it's down 0.5 point today. So what does that actually mean, though? Well, when the VIX curve is getting smashed and VVIX is only down 0.5 point, that's actually telling you that vol is not really going down very much in the futures themselves. So, for instance, think about, Mark, 2 days ago, the June future closed at 1890. It's down to 1680. It's dropped 1685. It's dropped $2 in 2 days. The July future, 2045 to 1870. AUG, 2133 to 1980. September, 2220 to 2092. The whole curve has steepened and gotten smoked. And, we're now in a really deep contango here. It's hard to argue with, what this means. And it's basically telling us, hey, vol, even with how hard they've smashed it, with the future at 1680 and the VIX at 1480, you actually have still a nice wide spread between that June future and where the cash index is.
Yes, it has been something we've been talking about here on the show for a while. It continues to be an intriguing point, listeners. Do you have any of those June puts in your back pocket? What are you slinging out there in June to take advantage of that crazy chasm? Maybe collapsing sometime soon. We shall see. Mr. Rhodes, same question for you, sir. What is catching your eye out there in the ever-evolving volatility surface this week?
constantly evolving and morphing volatility surface. I'm trying to find the exact date, but we had a period of time, just a couple of days recently, where VIX got up to, where is that? The 25th. Okay. Trying to find the term structure for the 25th. But we had some days where VIX got, looked like it was going to start making some moves to the upside. And for instance, on the 25th, VIX was a little above 19, and the June future, which this is a 5-week cycle, so even though it was May 25th, we still had some timed expiration, was at a premium of about $1.30 or so. And you could see when VIX was climbing, just a couple of times back in May, that, for lack of a better way to say it, the futures guys weren't biting. And when VIX is making some moves to the upside and the futures contracts are not mirroring that move to the upside, I often think that if you're worried about VIX creeping up right now and the futures guys haven't been biting on it, it's probably going to come back down. And sure enough, just a few days later, VIX is under 15, which is absolutely shocking. And the futures are now at a little over a 2-point premium, but they're still much lower than they were. They've dropped from 20.5 to the front month future right now is where? Get it. 16 or so. So we've gotten a drop of almost 4 points there, and we've gotten a drop of a little over 5 point, or about 4 points in the index as well. So just always, if you're looking at VIX and thinking about it being some sort of indicator, or you're reacting to what's going on in VIX, make sure you check the front month futures, because that relationship, in my mind, is actually more important than just looking at pure VIX by itself.
Let's keep on rolling. Speaking of VIX, let's get out there to the mothership, listeners. And man, it is a hefty mothership out there today. This is the most active day we've seen in quite some time, certainly by this portion of the day. We've already done well more than a day's worth of volume on an active day, on a good day. On a good day, you might see VIX 1.01, maybe 1.1 million contracts total for the day on a pretty banger day. And that's what we've seen lately, topping out around that level. Today, already, listeners, 1.36 million contracts on the tape today. So just a banger day by just about any measure, on trajectory to maybe threaten 2 million contracts today. Wouldn't that be something? So apparently, just the dwindling of the fear of a recession is going to drive us into the stratosphere from a volume perspective out there. Pay no attention to the inflation man potentially lurking behind the curtain out there. The ADV also back up to 800,000 contracts, up about 26,000 contracts from this time last week. So VIX, all things are pointing up this week, at least from a volume perspective, obviously down from a net value perspective. Let's get out into the top 10, listeners, and we shall unleash the beast known as Russell's Weekly Rundown. I know that's what you're all here for. That's what everyone's paying the big bucks for, to hear that sweet, sweet tune. I heard Taylor Swift's going to cover it on the show, Russell, so stay tuned for that. This week, listeners, we are back to 8 calls versus 2 puts. You think you might find 1 or 2 more puts in the top 10, and given everything we're seeing playing out there, maybe, oh yeah, they're there. The June 15 puts are there, spoiler alert. But outside of that, you might see a few others. But no, only 2 this week, listeners. Cost you 196,000 contracts to break into the top 10 this week. That gets you all the way out to the July 25s, followed by number 9, our new best friend, 197,000 of the June 15 puts. Did you buy some of those when Mark and I were joking about them all those months ago here on the show? Listen, you'd probably be a happy camper if you did. Number 8, 200,000 of the June 23 calls. Number 7, 204,000 of the SEP 35s. Number 6, 209,000 of the June 25s. Number 5, our second and final puts in our top 10 this week, 218,000 of the June 17 puts. Number 4, 262,000 of the June 27s. Number 3, 298,000 of the AUG 60s. The old 60 strike. Back in the crosshairs again, listeners. Number 2, listeners, 317,000 of the SEP 60s. And number 1, listeners, 352,000 of the June 30s. You know what I didn't say in there, listeners, are the June 40s. So a little bit of evolution going on out there in our top 10 in VIX land. Before I break down the action from every day this week, listeners, you know what you're here for. We're all here for it. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Wait for it. Got to do it twice, listeners.
Now, Russell's Weekly Rundown.
Mr. Rhodes, I hope your daughters are in the car with you and they are cringing at the sound of
they're totally cringing. Although they're just pissed because we've been sleeping in the car for 2 days so we can be first in line for merch.
Well, you got to do what you got to do. Those sweet rhinestone T-shirts aren't going to sell themselves.
No, they are not. And you can't find at any of the Michaels in the greater Chicago area. They're completely out of any type of rhinestones right now.
No sequins, no rhinestones, all
no
gone.
Sequins. Yeah, we went to 12 of them and couldn't find them for our outfits.
What about glitter? Can you get glitter still?
You can find glitter.
Okay. So not out of everything.
Generally at a Target near a strip club. So, we had no trading on Monday. Boom. Tuesday with VIX at 1868, way up there at 1868. Somebody came in and did using the June 7th options. Pretty darn good trade here. They sold 1,500 of the 18 calls and they bought 1,500 of the 24 calls. They took in a credit of $1.10. That gives them a break even of 19.10 when the index was at 1868. That's kind of nice. Checking the pricing, since prices have changed so much, I'm adding a feature to my weekly rundown. I'm going to tell you how these trades may be doing. And in this case, last I checked, they could get out of this trade for 25 cents. So they took in a credit on Tuesday of $1.10. They could get out at about a quarter right now. Odds are, I would assume they're just going to hold this one to Wednesday morning settlement. Another trade that I think was actually getting out of a trade on a Tuesday once again. Somebody bought back 1,000 of the May 31st 17 puts, which expired the next day on the open. VIX was at 1790 at the time. The VRO came, or the VIX settlement, that's the ticker for that is VRO, came in at 1806. But I did some digging and I couldn't figure out the price that they got in, but I'm pretty darn sure this is somebody covering that short. Probably didn't want to have overnight risk and suddenly wake up on Wednesday morning and have a VIX settlement that's much, much lower than anybody would have expected and had a negative surprise on that one. So it's probably worth 14 cents for them to get out of that one. On Wednesday, this is not a good trade. Somebody bought 6,000 of the June 7th, 47.5 calls for 4 cents. They are zero bid today, and they haven't exited any of those. Somebody also on Wednesday, somebody bought 500 of the VIX June 7th, 17 puts for 33 cents. And VIX was around 1824 at the time. Right now, the last I checked, the market was $1.60 by 210. So you're talking about the great put trade you guys have on. This is a really good one. Almost a 500% return, I guess, depending on how you're able to get out of it. Also on Wednesday, somebody came in and bought 430 of the June 7th 18 calls for $1.04. Those are 20-cent bid today. And it doesn't look like they've gotten out of them as well. And then Thursday and Friday, I think it's the same trader. Somebody came in yesterday, assuming that the market would not like today's employment number. And they came in and bought a little over 10,000 of the June 7th 25 calls and paid 12 cents for them. Almost the exact same volume has been sold today for the June 7th 25 calls between 4 cents and 5 cents. So my assumption is that was I bet you volatility is going to spike on that employment.
That guy's like, what about the inflation guy behind the curtain? Is no one's paying attention to him?
What's going on here?
That's a glass half empty kind of guy. I can get behind that guy.
Yeah, and I do want to throw something out there because it's something I monitor very closely. Deviating from volatility for 1 second, the SPX at the money straddle was only priced at 60.64% yesterday. And that is like the lowest pricing in front of a non-farm payroll number if you take the straddle as a percent of and now I'm stalling because I'm trying to find my numbers, but that is the lowest price for an SPX straddle in front of the non-farm payroll number since November of 2021. And in the NDX arena, the straddle was priced at 0.96%, and that's the first time it's been priced under 1% of the index value since November of 2021.
Wow.
And it's a dramatic drop in the anticipated pricing of both of those straddles. The SPX straddle is moving more than it today, and the NDX straddle is actually moving less than that. But kind of surprising, because we had an outlier move with the last employment number, that the straddles were priced so low. But you see trades like that, you see VIX moving down, you see VVIX moving down, and you think all the worry warts are getting, they're getting off the field and giving up for the summer.
Yeah, they're just
taking their ball and going home and not going to let anybody play.
They've taken their lumps. They're done. Why would you expect non-farms to move the market? That's crazy talk. Why would such a thing happen?
Because last time SPX rallied about 2% off of it. As one of the reasons, because the average move is greater than the average daily move around non-farm payrolls, especially since we started getting worried about inflation, which was shortly after November of 2021.
It is hard to bid up S&P straddles when realized vol has been so anemic, right? There's only so much you can do. You can only lift that dead weight so far before it just falls out of your grasp. And I think that's what was happening there. They bid it up as much as they could, but alas, or maybe for them, a great thing, because they got a deal.
Yeah, I was looking at selling a straddle. It's selling either an NDX or an SPX straddle late yesterday, and the pricing of them I even wrote something on my Substack about, this is what I think I'm going to be able to do. But the pricing was so freaking low, it wasn't worth it for me to put the trade on.
The juice not worth the squeeze out there. Listen, let's see if it's worth the squeeze from an overall VIX volume perspective this week. And the short answer is yes, listeners. Even with a shortened holiday week, they are making up for lost time. As I mentioned today already, 1.36 million contracts on the tape, listeners. If we rack that right now, let's see if any more has popped in since the last time we were talking. Of course, the second I say that is when everything I have decides to go down. There we go. 1.4 million contracts now on the tape. VIX continuing to do gangbuster numbers. The big dog today, listeners, on a very big day, 159,000 of the AUG 20s going up out there today. Let's see. Quite a few of those bad boys piling in, though, today. AUG 20s, 159,000 of those, followed by number 2, 111,000 of the July 26s. Number 3, 60,000 of the SEP 25s. Number 4, 53,000 of the SEP 30s. So all upside so far. Intriguing, listeners. Were folks thinking perhaps we were heading north? Were they bailing on this stuff because they had some in their back pocket? Either way, intriguing stuff. And number 5 here, 44,000 of the June 17 puts. On a day when vol is getting annihilated, only one put to be found anywhere in the top 10, and it is a distant number 5. Very intriguing out there. Yesterday, 1.21 million, so another banger day, listeners. The big dog yesterday, much smaller, 55,000 of the June 20. So that tells you today, these numbers really driven by a couple of massive trades. Yesterday, things much more even. In fact, everything in the top 5 yesterday was pretty much about the same size. Number 1, like I said, 55,000 of the June 20s. Number 2, 52,000 of the AUG 30s. Number 3, 51,000 of the June 17 puts. Once again, only one put to be found. Number 4, 50,000 of the AUG 42 halves. And number 5, 50,000 as well of the July 30s. Wednesday, a comparatively very anemic day, only 309,000 contracts on the tape, so everybody was asleep at the switch on Wednesday. The big dog, such as it was, 34,000 of the June 60s, 6-0. So once again, that 60 strike, casting its just gravitational pull out there on traders' imaginations. Number 2, 20,000 of the June 45s. Number 3, 19,000 of the SEP 19 puts. Interesting. Number 4, 17,000 of the June 30s. And rounding out the top 5, 13,000 of the June 28 calls. Tuesday, a decently active day, but compared to today and yesterday, not much to speak of. 613,000 on the tape. You think you'd have a little more just to make up for Monday's paper, but c'est la vie. Number one on Tuesday, 40,000 of the June 30s. Number two, 34,000 of the June 20s. Number three, 27,000 of the June 19 puts. Number four, 27,000 as well of the June 19 calls. So maybe you got some straddle action going up there. Number five, 26,000 of the June 25s. Monday obviously closed here in the U.S. for the Memorial Day holiday. Mr. Meatball, a lot going on out there. Kind of fascinating. We've seen vol get annihilated the past few sessions. And apparently, from a volume perspective, nobody gives a crap about any puts, except for the June 17th. That's the only thing that's trading. And outside of those, sir, anything else catching your eye out there this week?
No, I think they were already kind of loading up on puts over the last couple of days, and now it's just kind of the chickens coming to roost. But you are seeing a swath of call buying, which makes sense, right? We're back in the 14s. VVIX is at 84. It's relatively inexpensive to put on like a call spread. Pretty active day in today on the September 25-30 call spread. So no, it makes total sense, right? We've already seen vol fall off. So why would we, why would anybody be jumping on board of, why would you be jumping on puts at this point?
Because they want those June 15 puts that, as we just discussed, are racing headlong to $1, sir. Who doesn't want to get on that train?
Indeed.
Who doesn't want to get on that train? Mr. Rhodes, outside of the weeklies, sir, anything else catching your eye out there in the big mothership VIX options this week, sir?
Nothing within the VIX options. Nothing, no big trade that caught my eye going into this weekend or into, today's report. Nothing terribly exciting. Isn't that great? This is why you don't have me on every week.
That is fascinating radio, sir. Instead, we'll keep on. I know a product that does fascinate you, though, sir, and probably pretty fascinating
and
today.
That's what I want to get to that one.
Yeah, you want to get to that. I know where you're going, sir. He has clearly established in previous appearances, listeners, that Russell's biggest holding is SVIX. He cannot get enough of it. Hitting a new 52 or all-time high, actually, today. 2279 listeners. Just madness here across the board. SVIX, of course, our inverse friend, up 3 3/4 from where it was this time last week. Just yesterday, we were saying it hit a new high yesterday. We thought maybe it had reached its apex for a little while. Nope. Another point and change to be found out there today. Putting up some numbers out there today. 1,368 contracts on the tape today. That number is intriguing because the ADV is 1,362. So already hit its ADV's worth of paper today. Looks like the big trades out there today are 160 of the DEES 8 puts. Wow, that one would not have been my first choice, but that's what we got. Number two, 150 of the SEP 8 puts. So, okay. SEP and DEES 8 puts leading your dance out there in SVIX today. Listen, okay, that's a weird one. Let's go out to the overall top positions out there in SVIX land. The top position out there, let's just do a couple because there aren't that many size positions yet. Let's do a top three. And the number one position out there, again, the 8 put has fascination for someone, listeners. 1,700 of the June 8 puts is the number one position out in SVIX, followed by number two, 1,200 of the July 8 puts. Are you on this 8 put train here in SVIX, listeners? If so, hit me up. Let me know why. What is your axe to grind on the 8 strike? 1,100 for number three of the SEP 35. So we talked about this before, that crazy dichotomy between the 8 puts and the 35s, but that's what we got out there in SVIX. Those 35s don't seem as outlandish as they did a week ago. So crazy town. Mr. Rhodes, now is your time, sir. You can sound your horns, play your trumpets, and celebrate because I know you love yourself some SVIX.
I love myself some SVIX. I do have some short calls against some of my positions out there. I'm wondering if people that bought 8 and 9 strike puts realize this is a short volatility product.
They're just completely confused.
And I'm going to tell you something. You laugh at that. Mark Sebastian laughs at that.
I don't laugh at anything.
Yeah, no, you should laugh at that because it sounds so freaking silly. But I can tell you from my time at the Options Institute, there are people that do things like that because they call into the helpline. And so it's not beyond the realm a possibility that they think that that's a VIX ETP and that VIX is going lower and they bought puts on it. And they think, look at how cheap these puts are. Well, they were cheap for a reason. No, I have been diversifying my short volatility exposure. I have been buying a ZIVB, which is the mid curve short.
Everyone's favorite, ZIVB, sir.
And I have been, like I said, I like having a consistent short volatility position. I've probably been more aggressive selling some calls on the recent strength than I should have been. So we'll see how big the position is come June 16th.
Do you have a strike du jour for your preferred overwrite, sir? Inquiring minds want to know.
Oh, is somebody specifically asking that?
I'm just heading it off. I'm sure we'll get it.
The most recent ones I sold were the 23s.
There you go. There you go. So listeners, I headed off.
And that was this morning.
Oh, there you go. Good timing there, sir. And now those 35s are coming to play.
Every time it climbs a couple of points, I sell another out of my call.
Now that you sold those, we know the 35s are coming home to roost, sir. So good times.
Yeah, that's exactly where it's going to go.
That's exactly where it's going.
I'm going to own no shares of the
So there you go, listeners. I knew your questions. I can anticipate you guys by now. Let's get on out. Well, before we do that, Mr. Meatball, I know you kind of look at SVIX. It hasn't really got the liquidity yet. Mr. Rhodes kind of in love with the underlying. Is that your case as well? You've been slinging any underlying? You slinging any SVIX at all these days?
I'm literally was rolling some calls today. So I was long the 20 calls. I am selling them and buying some 23 calls for June. So yes, I have been trading some SVIX.
Did I sell those to you?
You could have made the trade right here. Saved some commissions.
I don't know. Did you sell them at 70 cents? Because if you did, then I bought them from you.
Oh my God.
That's
what makes a market. So, and my daughter's heard that I've made a lot of money on SVIX. So apparently I'm buying 3 $75 sweatshirts.
Nice.
The 3 concert. So there's 250 or 225. And I'm looking at the merch right now.
I saw someone got up at 1 a.m. to go buy $2,000 worth of Taylor Swift merch. So I don't think you're in that category yet.
And they wouldn't even need anybody to help them carry it.
Yeah, probably not. It's probably like three halter tops and who knows, a t-shirt or something. There you go. $2,000 out there, listeners. So you folks, are you down with SVIX? Are you intrigued? Are you doing what Mr. Rhodes is doing? A little bit of buy in the underlying and then overwriting at consecutively higher levels? Are you just doing what the meatball's doing? You buying calls and then rolling up? Are you trading with each other like they are out there, listeners? Couldn't do that if you're standing in the SPX these days. If you wanted to trade with each other, couldn't do it. You got to put the order through a broker. How crazy is that? As we keep on rolling out to UVIX, the other side of this equation, listeners. UVIX, the levered product, taking a whooping, I think is a technical term out there. Just a wee bit north of the 7 handle right now. 710 down, almost 2.5, about 2.4 handles on the week. Starting to put up some numbers, though. 13,000 contracts. The ADV is 12,000. It's already beating that. It's up 1,000. You know, Mark, I was talking before. I was not a huge fan of their relatively anemic reverse split the last time for this exact reason. I just said we're going to have to do this dance again in a couple of months. And lo and behold, here we are again, sir, back below the 10 handle in UVIX. What are your thoughts on this ever-eroding product, sir?
I mean, if you are a put buyer, it's a great product. If you are able to manage, or if you're willing to put a leg out when vol spikes up and buy some puts, you can do excessively well in UVIX because of the speed with which it will die. This is one of my favorite products to trade, one of my favorite products to kind of monitor. We've been seeing the option volume pick up pretty substantially, and we've seen obviously the stock volume is now pretty nice in this thing. Let me tell you what the stats look like. Yeah, I mean, they've got the average volume up over 7 million shares now. And the average volume is up to about 3,000 contracts a day. Still needs to grow, but definitely an improvement. I'm looking today, and it looks like somebody sold for a win the June 9 puts at $2, 2,500 times. Nice trade, bro. And then you've got some dabblers on the long vol side starting to step in because they think this thing's gotten oversold. We'll see whether they're right or wrong.
Indeed. Mr. Rhodes, same question for you. Are you dabbling at all in the sibling product of your favorite thing, UVIX, sir?
Nah, I've been pretty much keeping myself with exposure to the long. If I think that that we're going to get a spike in volatility, I tend to lean toward the VIX options. So, and I know you can take the other side of UVIX, et cetera. I've just always been I loved SVXY until they deleveraged it. So I was thrilled to see SV. I mean, really, I think SVXY is putting one of my kids through college, and I got to use SVIX to do the other one. So I kind of stick with what I know, and I've always had a good feel for the 1x inverse VIX.
The formerly beloved, now neutered SVXY. Pour one out for good old SVXY listeners. You don't have to do much for UVXY. 260 down 0.6 of a point. I guess they're just letting this thing go to zero. Options Queen in our chat asked the question on everyone's mind now. What will reverse split first, UVIX or UVXY? I think it's clear now that the UVXY folks don't give an F about this product because they're just letting it dwindle. I mean, it's already, the 10 handle is usually where people start thinking about this. The 5 handle definitely, and we've been below both of those for ages now in UVXY. So they clearly do not care. UVIX starting to threaten the 5 handle soon too as well. So they're going to have to start reverse splitting again. So apparently they're cool with reverse splitting every quarter. I guess that's going to be their deal. But c'est la vie, intriguing stuff out there. Like we said, 180,000 is the ADV. Actually managing to be up 1,000 this week. So people are still trading this, even though the value continues to just defy the use case for options every week. The big position out in UVXY, 37,000 of the SEP 8s. Man, what's with the 8 strike across the board? Someone's really got huge axes to grind out there on the 8 strike. Let's get out of here on everyone's favorite. Our buddy on the show last week, Mr. Jim Carroll, this is his favorite. He's now VXXologist, as we called him on the show last week. Good old VXX at a 31 when we kicked off the show, still hanging out at about a 31. That's still down an impressive 460 on the week, listeners. So nearly 5 handles coming off the top here for VXX. So starting to do what it's supposed to do. The ADV 51,000, so also moving in the right direction, about 4,000 more than it was this time last week. The big position out there in VXX, it will be, and still until the middle of this month, it'll be the June 80s. Those are the VXX ones, so they're not really going anywhere. It's kind of a roach motel for liquidity on that pre-split adjusted stuff. Behind that, we have another VXX one. We have the June 20s still. So the top 2 positions are still pre-split adjusted nonsense. So once we get those off the board, then we'll have some more liquid stuff we can sink our teeth into out there. Mr. Rhodes, are you also becoming like your buddy, Mr. Carroll? Are you now going to be a VXXologist, sir?
I love being a VIX ETPologist. Or apologist. Yeah, I probably was a VIX ETP apologist for years.
Apologist would be fitting, sir. I think that would.
It would be, but no, Jim and I are very close to being at the same firm. So you're going to have to figure out which one to have on the
Vol implosion happening. Whatever firm that is, sir.
I can't disagree with Jim.
Mr. Meepo, I know you've been eyeing VXX a little bit more these days. Are you dipping your toes in those? Well, nice move this week.
It is a nice move this week. Yeah, we're short that paired with a SPX put fly, and when we got that dip yesterday. We managed to unwind the whole thing with VXX up nicely and our little put fly up nicely on the open. Ended up paying off pretty nicely before we took off. Anytime you get the curve this steep, there's some opportunity in that product. It can just keep going lower. I love that it's got some teeth to it too. Still trading $30, so yes. I'm a fan.
Nice when both legs of a trade pay off for you, isn't it? Not just one. That's always always a nice thing.
Indeed.
You're getting some nice love out there in the earnings vol front, listeners. Check them out, theoptionsinsider.com. Click on the earnings news, earnings trades, earnings volatility reports, all that good stuff available there for you, listeners. As we keep on rolling, it is time to get dangerous. It is time with a crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we try to wrestle with the slippery gods in the vol space, see what they have in store for us for the coming weeks. And Mr. RHOADS, Dr. VIX Defense Force out in earnest. You weren't even on the show last week, but you did get a bullseye. I was generous to you. It was close, but not quite within our 10th of a point. I said, it was so close that I had to give it to you. And we have Dave chiming in today on Twitter to remind us to make sure you get your victory lap for last week's Crystal Ball. So the Russell defenders, the Russell apologists are out there in force. They want to make sure you get your flowers, sir. So there you go. Bask in last week's victory, sir.
Basking in this blind squirrel finally finding his nuts on this show. This would be if this were a series finale, I think that's how it would round up. It would be a feel-good show as the worst participant in the history of the Crystal Ball finally gets a bullseye.
Your track record, let's say, over your extended run with SEBO was not exactly stellar.
It was not good.
Part of it, though, was it was your job to have to keep buying VIX higher every week, so that didn't help you. But speaking of VIX being higher, all of us screwing the pooch on the show last week. It was myself, the Rock Lobster, and VXXologist, and all of us had north. VXXologist, he was feeling this non-farms was going to wipe us out. He was at a 21.20. Andrew was at a 17.25. I was at an 18.75. Spoiler alert, no 14 handles, let alone no 17 handles in VOLQ. So, yeah, no winner this week, even close, listeners. So I will put the caveat out there. There will be no volatility views next week. I will be at a very important event, so I will not be able to attend the show. So we are now guessing for 2 weeks to make things even more difficult, listeners out there. So, Mr. RHOADS, you won last week. We will give you pride of place this week, sir. What are you feeling for VIX in 2 weeks?
In 2 weeks. Oh, my God, that's so far out into the future. 1675 on VIX. And are we still doing VOLQ as well? Or are we?
If you want to, whatever you want. I'll let you choose. You can pick whatever vol products float your boat, sir. You want to do UVXY 2.5? I'll let you have it.
All right, 1675 on VIX because it's so low and it just can't go much lower. And we're gonna do VOLQ. I'm gonna put it right at a 20.
Dang, that spread
seems to be holding up a bit better. The outperformance of the big cap, the really large stocks in the NDX, if there starts to be concern around that, you're going to see put purchasing on those stocks. And due to dispersion trading, that's going to work its way into the NDX arena as well. So I think that one's going to stay a little elevated.
All right, Mr. Meatball, same question.
Individual names.
Same question for you, sir. What are you feeling for vol this time in 2 weeks?
Well, all right. Well, that's a little harder. I got to tell you, I think we'll see some selling next week. Just some profit taking. I think we're going to see the S&P down, but not market breadth actually positive. Kind of the opposite of what we've seen the last few weeks. And then maybe we get some continued vol selling the following week.
We lose you?
Oh, I'm thinking about a good
deep thought
palindromic number. 1441.
Wow, 1441 for the Meatball. I wrote in my answer while Meatball was talking. I'm not feeling that dissimilar from what Russell was putting down. I'm going to be crazy now, listen. Crazy with a 17 handle. Insane how much vol that is. 1705. Remember, this is for 2 weeks. So there's your market. I'm a little uncomfortably close to Russell, but that's what I was feeling. You can't deny your volatility heart at the end of the day, listeners. All right. That is going to do it for us here on Volatility Views this week. I want to thank everyone who took the time to tune in with us for this show, for everything else this week. And before we go, Mr. Meatball, sir, if folks want to check out what you got cooking, where should they go? What should they do?
You know what you're going to want to do is come to optionpit.com. I'm writing about VIX and volatility, and index vol just about every day on my VIX Edge blog. Yesterday, I made note that I was expecting to see some outperformance out of the Dow Jones Industrial Average for the next few days. Lo and behold, it is blown the doors off of the other two kind of major indexes. Again, one more time, and I think it's interesting that the equal weighteds are doing so well. I think it just shows you that we're seeing a little bit of rebalancing and a little bit of logic return to the overall marketplace.
Little bit of
That's
logic.
optionpit.com.
There you go. Check them out. Optionpit.com is the place to go. And Mr. Rhodes, if you want to check out all of your various tomes, or who knows, maybe subscribe for one of your courses there at the Kelley School of Business. Where should they go? What should they do?
Goodness gracious. Well, Kelley, you gotta go through a rigorous process to get into that program. But if you want to know what I'm up to, I always tweet out what I'm up to, much like I did about this program and butchered that tweet earlier today. But I try, and then I do a review of what's going on in the markets via Substack every Saturday, and then typically I do a preview on Sunday. I gave myself last weekend off, but I'll get back on it starting tomorrow morning as far as that goes. And then periodically, the numbers that I was talking about with respect to the SPX and the NDX straddles, that comes from something that I published midday yesterday on my Substack, just talking about what the history around the non-farm payroll number was, if you think about it, is sort of an earnings announcement for the overall market.
There you go. Check him out, listeners, on his Substack. Of course, you can always give him a follow at Russell Rhoads, 2 S's, 2 L's, RHOADS, all one word over there on Twitter. You too can be like all of his defense forces who think we don't give Russell enough flowers here on the show. There we go. We celebrated him suitably. You're right. All you pointed it out. It is a rare occurrence that Russell gets the crystal ball. We should celebrate him suitably. As I mentioned, that is going to do it for all of you on-demand folks. That will conclude your broadcast week with us this week. Thank you for joining us. We love you all out there. We'll be back in a little bit for all you pro folks with Options Oddity. Should be some fun, unusual activity to sink our teeth into this week. I was just looking over some of the trades. There is definitely some intriguing stuff. If you want to join us there, only one place to go, theoptionsinsider.com/pro. That also gets you in the hat for the June Pro Trading Crate. Continue to bankrupt me, listeners. Take all of our awesome goodies that we send out to you every month. It's pretty fun. theoptionsinsider.com/pro. Remember, off next week, we'll try to get something in the feed for you, whether it's a best of or maybe a quick data rundown, so you guys are not left holding the bag next week. And then back again in 2 weeks, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.